All righty, Greg. Well, here we are to talk a little bit about inflation because we've had the CPI data. Today's the 13th of September 2022. But I forgot to mention yesterday we talked what we did over the weekend. I'm one of the organizations I volunteer for. I'm passionate about golden retrievers, as you know. And we went to our annual picnic for the local As Good as Gold is our local rescue. And that's me right there. I don't know if you can kind of see me here holding Winnie. We've got Winnie 6 weeks ago. There I am right there. Getting a little bit tired trying to get all these golden retrievers to sit and all look at the camera was a little bit of a challenge, but that's not even all the dogs. I think they had close to 60 dogs that were there, and it was a really good time. But that's what I did this weekend, or one of the things that we did this weekend.
That's fun. You've always enjoyed dogs. I loved your dogs. Even though, was it Molly Molly liked me.
No. Molly just has anxiety. She's my chocolate lab, and that poor girl, she's just like nervous all the time. So she barks at anybody when she's happy or scared, and I think she barked at you. She's a little bit of a knucklehead. Lucy was my other golden retriever who loved. I think you met her. She passed away a couple of years ago.
Yeah,
but she liked you a lot.
Well, that's fun.
So what have you been up to? We didn't talk about what you did over the weekend.
Well, I talked a little bit about it. I've been gardening a lot. My wife and I, a couple of years ago, decided to become part of a community garden. So there's actually we live in a nicer neighborhood here in town with some HOA rules that don't allow for gardens, but we love gardening. And so we had a friend of ours buy some property outside of town, and we got together with 6 or 7 other families and built this massive garden. It's like 3.5 acres.
That's a big garden.
And we garden everything. From fruit trees to berries to kale to cabbage to corn. I mean, you name it, we grow it. We tried okra this year. But yeah, that's what I was doing this morning. Actually, I had onions that I had pulled out. They were drying over the weekend, and we got a rainstorm coming in today, so I had to go pull my onions in. But it's been a fun adventure.
Do your hands smell like onions? No?
I wore gloves because otherwise they would.
I know you're saying you did garlic, and I remember the first time that I drove through Gilroy, California. You drive through the town, and it's like, do I smell garlic? And yeah, you do. Gilroy, as you know, Gilroy is one of the probably largest producers of garlic in the U.S.
No, it's one of those things that I've felt, and you're seeing it. I mean, today, as an example, we'll get to food prices, I'm sure, in a minute. But I've felt for a while, as a society, we've gone away from learning how to grow our own food, and we saw some of this chaos in COVID. It was over toilet paper, but so my wife and I've decided to learn how to grow our own food, and it's been fun. It's been a learning experience, put a lot of work into it, but yeah, really found a new hobby that I like almost as much as.
In the back of my head, I'm thinking of Jack Spirko, who you turned me on to.
Yeah.
Who has a podcast that's called the Survivor Podcast, which I think everybody could benefit from a little bit of that mentality, being able to ask the question. I think this actually goes a lot to what we teach in OptionsANIMAL, is like, what are you going to do when things go wrong? And the time to figure that out is not when things are going wrong. Like if we look at the markets today, holy macaroni.
Yeah.
One day doesn't make a trend, but it sure just took about everything we did in the past 4 or 5 days, almost the past week, gone in one day. This is the S&P 500, big candle down, gap down. We were up quite a bit yesterday. It was interesting. Yesterday, I was doing a daily market review for the community, and I was noticing that the VIX was higher along with the S&P going higher. And I wasn't exactly sure what the reason for it was, but it's pretty clear now that there were people hedging. So that's what's going on today in the markets. But we wanted to talk more today about the reasons why, right? Was there anything else you wanted to address, or you want to jump to this?
No, I mean, there was one little storyline that they were trying to point the optimism to the last few days of, is Russia losing ground in this war in Europe, and does that mean that we might see a resolution? And I'm not a geopolitical expert. I watch from a distance, so I really don't know if it's just talk or what it is. But I think there was some people in the financial world trying to point some optimism to that, or some hope that, hey, if this Russia-Ukraine war came to a halt, what would that do to the markets? And I actually, to be honest, I think there would be an initial relief rally like we just got. But I think it would do exactly what we're seeing today. I think it would light the economy on fire, and inflation is going to skyrocket. Not that it already isn't, right?
Well, if the conflict in Ukraine were to find some sort of resolution?
Yeah, I think that gives the Fed even more reason to step on the brakes from an inflation standpoint. So not that I'm hoping for this war to continue. I would love the war to be done yesterday, but
well, Greg, if you think back in your adult life, or as long as you can remember, that you were aware of what was happening beyond your own little house, I think that you find that we've been at war more than we've not been at war. So it's probably going to be a thing that goes on. I read some things. I think John Mearsheimer from Chicago, University of Chicago, and some other sort of geopolitical commentators forecast. I happen to think we're going to see this Ukraine thing go on for closer to 5 to 10 years.
I do too.
So that's, I mean, we're going to see in, daily news and hope, but I mean, I hope that I'm wrong. I hope we resolve it, but it looks like we're gearing up for the long term. But before we go any further, okay, I've got a news flash, a break, an emergency notice that we have to. This is very, very important, very, very important for everybody, and that is, thank you for subscribing and liking the Everyday Trader. So stop right now, everybody, and hit the like and the subscribe button down there right now. Hit that button and say thank you, or if you want to say thank you, say something in the comments. We really appreciate the feedback. As of today, we broke 4,000 views, which is not huge, but it's a significant milestone for us, and we appreciate your help. So right now, if you would, just make sure you've got that bell notified. That way you'll get alerted if there's any new ones. If you hit the subscribe button, and when you're listening to this, like and like I said, comment. We've got some good comments and feedback, so please keep that up. So really important, mention that at the beginning, but please do us a favor and do that right now. Thank you very much. All right, so switching gears to, as promised, we're going to talk about the Consumer Price Index today. We saw what happened in the market already. I am sharing my screen, aren't I?
Yeah, I can see it.
Okay.
BLS.
Yeah, the BLS report, and it's shared. Okay. So the headline, of course, was that Consumer Price Index for all urban consumers rose 0.1% in August. So on a seasonally adjusted basis, that's on a seasonally adjusted basis. Over 12 months, we saw that all items increased 8.3% year over year. And that's a drop from where it was last month. So it was 8.5 last month. But the truth is, the numbers that came out were a surprise to the upside. So this was higher than was expected. On the headline, Greg, why don't you tell me your thoughts and observations on the release from today?
Well, I think you're right in that, the headline lower than last month, but we missed expectation, like you said. But I think the reason why expectations were lowered is everyone has seen gas prices come down across the country.
Yes.
In some places more than others. And so I think the hope was that because gas prices have been coming down, that we would see a bigger drop. In fact, it was actually expected to be a drop in the CPI month over month rather than an increase. And so the fact that inflation increased again, surprised to the downside. I think the fear now is, of course, the Fed is going to not only, I think it locked in a 75-point rate increase next week, but maybe even a full percentage point it's next week. No, 2 weeks from now at the meeting. No, it is a week from now. It's the 21st. Next week.
So yeah, it's next week. This is a chart. You mentioned retail gas prices. So this is from Gas Buddy. They plot prices, and here we are going back to 2020. We saw the spike, and we definitely seen a dramatic decrease in gasoline prices. Greg, do you have any? Can you have any explanation for why that's happened? What would be the reason behind that? Any sort of thoughts or ideas as to why we've seen such a dramatic decrease in
Yeah,
gasoline prices?
and call this what it is. It might be a political move. It might be the whatever. It might be a strategic move. I don't know what you call it, but what I do know is that we are pulling reserves out of our Strategic Petroleum Reserve faster than any pace we ever have. Just this last week, there was more oil and gasoline pulled out of the Strategic Petroleum Reserve than any week on record.
Yeah, so this is data, and this is pulled. I got to give credit to Jim Bianco, who's a friend from Bianco Research. So apologize, all rights are reserved, and I didn't get your request ahead of time, but Jim, we're happy to make it up to you. But appreciate you follow Jim on Twitter, and maybe some point we'll get Jim on here to talk a little bit more. But you can always count on Bianco to take a sort of non-biased view, an objective view. And I love Jim because he doesn't seem to be following the same echoes that you hear, a lot of echo chamber stuff, but he's looking at other things that are out there. And this is a long-term chart going back to the early 80s when the SPR was created. And the point that's noted here is the level that we have in the Strategic Petroleum Reserve. You have to go back to November 23, 1984. That's how low we are. And this is what's being done with the intention. The whole reason we're pulling from the SPR is to lower inflation. And I guess the broader question is it working? And we can dig a little bit deeper into the data behind the Consumer Price Index that was released today, because they release more than just a statement. They actually back it up with their data. And specifically, if we go to the very bottom, there are 7 tables which are fairly important. The table 6 is the month over month change, and the table 7 is the year over the year change. So again, we tend to sometimes maybe I get a little bit wonky here, but I'm a person who needs to look at the data to understand it. So I like to look at both table 7, and this is table 7. If you looked at table 7, by the way, there's a 300 or 400 different items on here. What were some of the interesting things you were noting on there when you were looking through this? Were you talking about baked goods? And
yeah, baked goods was up pretty drastically. Recreational reading.
Recreational reading.
Yeah.
So video discs and other media. So you can see that there's a lot of details that.
And margarine, by the way, margarine up 7% month over month.
7% on margin. I love like cupcakes is one of there's cupcakes that are in here. Cookies. Wait a minute. Cookies up 14%. This is outrageous. We can't put up with this. So there's this indent level. You can see how these are sort of nested, and you could look. Level 1 is food. So the 1 is a higher level thing. Level 4 is a pretty good level to look at. That a lot of economists do, because it gives us a fairly broad, but it's not totally overwhelming, not looking at 400 individual items. So if we look at the level 4 here, I know that this chart's a little bit hard to see, but I've sorted by what the percent change year over year. So this is looking at August last year to August this year. And the usual culprits are at the top here. So we've got gasoline, fuel oil, motor oils, which are all sort of related to each other. And then we see a lot of grocery type items that are very high as well, because those are strongly affected by oil and gas. So and this is pretty consistent. This has come down pretty significantly. I think last month was instead of 68%, last month I think was 109 for fuel oil. So a lot of, or maybe it was, I think it was 109 last month or the month before, but they're coming down a little bit. So this is the year over year. But if we want to get an indication from a short-term standpoint how we're doing, we should look at the month over month. And I think there's some interesting data if we pull that up and look at it, as to what are the biggest contributors. And I've got probably a easier graph to look at in the PowerPoint here. These are the data for looking at July through August, looking at the increase. And so all items month over month were up 1.1. So everything above this line, inflation is going up. Everything below this line, inflation is going down.
No, before you go too far, explain what those orange lines mean.
So the orange line, so the orange line is the importance. If you were to look at what CPI tries to do is represent a basket of what the average person will purchase. So everything from fresh biscuits to uncooked beef, is, all these different hundreds of items that are on there. And we put a relative importance weight, not we, the Bureau of Labor Statistics puts a relative importance on each one of these items. So the idea is that it represents a generic crosscut of the consumer. And so how does, if cupcakes go up and it's, cupcakes went up 14%, but it's only a weighting of 0.18, it's not very big. Overall food is important to us, and that went up 13.5 is the weighting. So the orange lines here indicate the weightings. And what I've tried to do is highlight those important items that are in this is the month over month, looking at last month to this month, looking at the important items and see what's impacted. And so the bigger the orange line, the more important it is. And the most important of all is rent and shelter. That is the number one thing. What you can see from here, and let's jump to the positive side of it, and that is this attempt of pulling money out of the SPR, is it targeting what it's supposed to be targeting, and that is gas? And the truth is, yes, it absolutely is. If we look at the most significant drop in inflation month over month, the single biggest item to go down is gasoline. So gasoline is down 10.6%. So I think there's a reason why there's a celebration that has been planned for a few days today in the White House to celebrate that the price of gasoline has gone down. And so mission accomplished. Good job by pulling out the Strategic Petroleum Reserve to drive that down. And we've also seen a reduction in other important items. Recreational service and used cars and trucks have also gone down as well. But everything everything above this blue line here, month over month, we've seen an increase. Items like medical. Go on.
Sorry, I was going to say, I think the reason why this is pretty significant to the market and why we're seeing, I think right now, we're down 180 points on the S&P. This is like the fourth or fifth largest drop point-wise in history for the S&P that we're having today. And so why this is such a big deal is it's not just fuel anymore. At least that's what this inflation report, the previous ones, it's not that the other ones didn't have some inflation, but it's not just food and fuel, which was hopefully going to be controlled by release of the Strategic Petroleum Reserve, outside of just the Fed having to raise rates to put their brakes on the economy. And I think the genie's out of the bottle at this point from an inflation standpoint is what I believe the market is interpreting this report as, is there's now inflation in a lot of different places that can't be controlled by lower gas prices, at least very quickly.
I think that's exactly that is exactly my conclusion and my read on this too, is that that there was a lot of indication and a lot of thought that the reason we've seen such high inflation was because of the spiking prices of fuel. Although historically, if we look back, we've seen other spikes in fuel and we've not seen the same increases. So it's really a combination, a perfect storm of a bunch of things that have happened. We've had this zero interest rate policy for over a decade. We've had quantitative easing buying assets. But what really kicked, if you go back and look at when inflation really started to kick off, it came after the CARES Act, and we kicked $5 trillion into the economy. Now, I'm not saying we shouldn't have done that. But I am saying that is the reason for it. And it begs the question of if we should be trying to stimulate the economy more through other things. I'm pretty sure that the Fed is not really pleased with the subsequent stimulus that's happened, including this tuition forgiveness, which is another form of stimulus. Not passing any judgment from a purely objective standpoint. If you're trying to control inflation, stimulus isn't going to help you get there. This rent one is really, really significant. We're hearing anecdotal stories of people. I was talking to somebody trying to get an apartment in New York City, and they said that people are bidding over price. And I'm like, oh, wait, are you buying? And she's like, no, we're trying to rent. That people are overbidding whatever the asking price is, and they're being rented sight unseen. New vehicles, that's not as much of a concern, but medical care services, transportation services, and by the way, the education, I don't know if I mentioned this, education and communication, the biggest component of education and communication is tuition, and that's not a surprise to see.
Hey, just for giggles, you want to pull up the FinViz chart, the
heat map?
The heat map. I know we pulled it up a few days ago. Look at that. Twitter's up.
Wait, there's green. Twitter. Why is Twitter up today? I don't know. Maybe Elon Musk.
The board of directors is voting to accept Elon's buyout.
Oh, that's not really a surprise, but yeah, this is so an individual, just a little bit of checking in on some trades and strategies. I mentioned doing a Tesla covered call. I'm actually feeling pretty darn good about that covered call. I did an in the money covered call. You give something up in terms of upside, which is not risk, by the way. People say the risk in a covered call is the stock going up. That's not risk. That's missed opportunity, which is something more akin to FOMO. But I've got this covered call that's on Tesla that I feel pretty darn good about it right now, where my short is at 275. So, with the stock at 194 at this time that I look at right now, anyways, I've still got a very high probability of making money on this trade. And I probably will be able to adjust it to make even more. So keeping probability on my side and being able to days like today, I don't want to say, laugh, but I definitely am keeping a cool head and not freaking out when we're seeing a sea of green like this, when your head's trading.
I don't know when the last time I saw only 5 green stocks on the heat map, and 3 of the 5 being in agricultural inputs: Corteva, CF Industries, and the Mosaic Company.
Yeah, that's interesting. So what do you suppose is the explanation for this market move today?
I think it's giving back what we rallied on the last week. The hope, I believe, the last week was inflation has peaked. The Fed is going to slow down. And the market was betting on a Fed pivot again, that the Fed was going to pivot to being accommodative for the S&P. And I believe today's move is nothing more than all those people who had bought the market the last 3 or 4 days said, nope, we're wrong. Let's go back short again. The Fed's going to be aggressive. And the Fed has never changed its statement. They're still have said very clearly, we are data dependent right now. And if the data comes out that it shows that inflation, and not only are we data dependent, we're really only a single mandate Fed. They normally say they're a dual mandate, price stability and full employment, but they have very clearly come out in the last several statements and said, we're willing to sacrifice the employment market right now to control inflation and have price stability. So a Fed with a single mandate of price stability, and you get an inflation report like this, markets are going lower.
Well, I saw Nick Timmeros on Twitter saying that Nomura has now said that they believe a 100 basis point increase is more likely. So yesterday, when we looked at this,
we know they were thinking about it last meeting.
Yeah.
Right.
Mm-hmm.
But, now we have more data that shows inflation's more widespread. I wouldn't be surprised with an intra-meeting hike. A lot of people who haven't traded for very long have probably never seen the Fed do a move like that. I remember back when the internet bubble was bursting, and they were trying to slow the economy down. Sorry, not when it was bursting, when it was blowing up. I remember intra-meeting hikes that all of a sudden out of the blue, Greenspan and company would say, hey, we're raising rates. So I know there's not a meeting, but I don't know that we'll get that now. I think that would really freak the market out even more than it is.
We saw Neil Kashkari last week. He doesn't really care. He likes to see the market go down. So he's probably really happy today. See how things are going. But I think what's loud and clear from this report, and I do know, because I actually, speaking of Neil Kashkari, I attended there was a webinar on the impact of energy prices on inflation. And I know that there's a significant contingent of folks at the Fed who are of the mindset that the reason we've seen the inflation that we have is due to oil being high and gas translating to gasoline and transportation costs. If that is the case, we still haven't seen that play out. And certainly these other very important things, there's no reason to believe that medical care, shelter, you could argue that maybe transportation services and new vehicles, but in terms of tuition, education, communication services, medical care, rent of shelter, which are the three most important ones, I would argue, to your average consumer, that we don't see those getting any better anytime soon. So the question I was really getting for you, and I think it's twofold, I think the answer is twofold. One is what's happening today. Is that an indication of purely on the Fed, is what we're seeing in the markets purely due to this dramatic shift? I mean, yesterday there was 0% chance of us going to a 100 basis point hike. Today it's at 34%, or right now, and this has been kind of wobbling around. It changes, but we're nearly, as of today, 100% chance of at least a 75 basis point hike. And, quite possibly we'll watch this over the day. So is what we see today in the market happening because of purely the FOMC might be raising rates, or is it a bigger concern about the overall economy, or a little of both?
I don't know if it's the overall economy yet, other than the Fed's. I think people are now starting to look forward, and they're seeing what the White House is doing with the Strategic Petroleum Reserve. They're seeing gas prices come down, and now at the same time seeing, inflation continue to tick up. And so now I think the narrative that I think is taking hold amongst some investment houses is, okay, this is going to be a longer battle with inflation. It's not going to be controlled as easy. And so the Fed's going to have to be more aggressive for longer. And that's what I don't think is priced in. I think the hope has been that, yes, we have an inflation problem. The Fed's going to be aggressive really quick right now, but then they're going to be able to slow down. And in fact, I know just a few months ago, there was talk that the Fed was actually going to go back to cutting rates by the middle of next year. And I think people are realizing this battle with inflation is far from over. And it may become more persistent than they had originally thought. So I don't think, and if they have to do it for a longer term, then it could actually start to impact the economy. I don't think in the short term we're seeing an economic impact a lot, because, and we talked about this just yesterday. I mean, Apple's product release is great right now. I mean, the consumer is happy. Gas prices have come down. So in the short term, the economy is doing okay, I believe. The concern long term is that, will these Fed actions that are going to be a result of this inflation change that 6 months from now? So that's, I think, what's going on with the market's reaction today is I think we're starting to now price in some a more aggressive Fed for even longer, instead of just a, hey, short term we're going to aggressively hike, but then we'll be done after that.
Yeah. Well, it's definitely a significant move that's catching a lot of attention. And Apple down 6% today, so down almost exactly $10 as we speak. As an Apple shareholder, I don't like to see that, but still looking where we are relative to the main, the range, you're still in the middle of the range of where we've been. Apple is one of those equities that, we know there's a lot of institutional support for it. And somewhere down in the 150s is where people like Warren Buffett believe that it's probably worth buying. I don't know if he has any capital left after buying Oxy, but we'll see going forward. We talked positively about Apple yesterday, but I think this all makes a good case for why spread trading has its benefits, because that the response sometimes can be muted in both directions, but on a day like today, you can keep a cool head.
No, and it's things like, we teach at OptionsANIMAL. For those of you who don't know a lot about us yet, I know a lot of you who are watching are students already, but for those of you who aren't, it's one of the things we really try to focus on is risk management, and teaching people how to use a trade called the collar trade, how to track your cost basis in your trades, so that you can know where am I on any given trade. Because it's days like today that if you don't have that trading plan that Eric has alluded to, if you don't have it clearly planned out and know exactly where your risk is and exactly what your plan is, you get hit with days like today, and you're an emotional basket case sometimes.
Yeah.
And you're constantly updating, like, oh no, where's my P&L? Where's my P&L? And it doesn't make for a fun life trading this way. But if you have it all planned out beforehand, it's a down day in the market. I'm going to go pick onions up out of the garden.
Exactly. And that's,
I don't want to listen to Scott Wapner anymore.
Do you know Rudyard Kipling's If? I don't know. I don't know if I mentioned this.
You haven't mentioned it.
It's a poem that you need to read. You probably need to give it to your son.
I'm going to go get it right. I'm going to go look it up right now.
You should read this.
I knew he was a poet. I just can't reference that one specifically. Well,
he did Jungle Book and some other. So if you can keep your head about you when others are losing theirs and blaming you, this actually brings tears to my eyes. If you read it, it's everything you want for your child. It says son, but it's everything you want for your child. And I think about that first line. If you can keep a head about yours when others are losing theirs, you don't get there by accident. I tell people what we do here. People come to us because they want to learn how to trade and how to make money. And that's key. But if you think of Warren Buffett's rules, number one rule is don't lose money. Number two is don't forget number one. That's really, I think there's a lot of wisdom there. It sounds kind of, quippy and kind of cute, but the truth is that it's risk management that most people aren't even aware of what risk is, never mind risk management. And so teaching people risk management is the essence of what we do. And it is for a more sophisticated trader. It's not for the YOLO trader who's looking for, what's the next GameStop and can I buy short-term calls or sell naked puts on Netflix or something and roll the dice and win. We tend to attract a more sophisticated person who has different goals than somebody who's looking to have fun in the market. They're more serious people and they're willing to recognize that it takes some work. So anyways, I didn't want to take too much more time than what we talked about today. We promised an update on CPI and hopefully you got that. We'll take a look at trying to get some more stuff out maybe later this week. Do you have any ideas or thoughts on that when we do the next one?
Later this week? No. Maybe we can get together. I know you and I are doing an OptionsANIMAL broadcast on Friday together. So maybe we can do one either Friday morning or first part of next week.
All right. Well, thanks again. Don't forget to like and subscribe and set the alarms and ask questions or comments. Any feedback you have is very important for us. And the best way to do it is to leave it on the YouTube channel.
Thanks, everybody.
Thanks, everybody. We'll catch you later. Have a good one.